Welcome to the Remarkable Retail Podcast, Season 7, Baker's Dozen, Episode 13. I'm Michael LeBlanc.
And I'm Steve Dennis.
Our guest on this episode is Kristina Rogers, EY Global Consumer Leader, the architect of EY's seminal future consumer programs, including their Future Consumer Index.
Yeah, I was actually hoping to meet Kristina when we were in Barcelona. I ended up hanging out with Thomas Harms, her fellow EY partner, and it's good. We got her on the mic and we get to tap into her knowledge, both specific to that study as well as just more broadly her take on the global retail and consumer scene.
All right, well, let's jump right into the news of the week. The NRF has issued their sales forecast, and they're pretty positive. I mean, it's not unusual for the NRF to be positive, but talk about what you read and what your thoughts are.
Well, it always, as we've had inflation in the mix, it's always hard to interpret the numbers as positive or not. They are predicting growth between 3% and 4%, which is actually a little bit less optimistic than a couple of forecasts we've heard. But pretty much everybody is in kind of the 3 to 4.5 range at this point. With inflation is probably slight real growth. So I guess the NRF has the benefit of their overall view and relationships with retailers to inform their forecast, as well as theirs comes out closest to the holiday. So perhaps they've got the latest and greatest perspective. So we'll see how accurate it is. But I think what we're going to see for the holiday is pretty modest growth, most likely. As I said, I think a few weeks ago when we were talking about some of the other forecasts, I'm feeling like it's likely to be closer to 3, but we shall see. I think probably the big news is just my favorite word, bifurcation of performance, where we'll see a lot of people struggle to get to positives, but then we'll have some of the more essential retailers that are likely to perform at 4 and above.
Well, I do like reading their report. Jack, their chief economist, is a veteran, and I've had the chance to talk to him a couple of times. And savvy guys, you say they get to dip into a lot of conversations directly with very senior leaders as well, I'm sure, to inform their opinions. Now, speaking of informing our opinions, some macro news out of the U.S. around interest rates and stuff like that. What do you make of the big picture economic news?
Yeah, just a quick dip here. I keep saying we'll try not to talk about macro every week, but then there's always so much news, and it's often kind of the shifting tides, I guess you could say. But this week, this past week, we got both the U.S. Fed keeping rates flat, the Bank of England also keeping rates flat. That comes after, I guess we talked about it last week, the European Central Bank also keeping rates flat. So I think we're getting just this kind of signal that maybe we're done with rate increases, but generally speaking, there's a sense that these interest rates are going to stay, and just monetary policy in general is going to stay restrictive for some time because inflation continues to be an issue pretty much in every economy. I think one of the things that's becoming more and more clear is that the U.S. economy is continuing to be quite strong, whereas most of Europe is noticeably weaker. So we'll see how that all sorts out. And then this morning, as we're recording this, we got the U.S. jobs report. And while it was certainly not poor, there were some signs of weakness emerging in that the unemployment rate ticked up a bit, wage growth a little bit less strong. I wouldn't conclude too much from 1 month, but this is kind of the first sign of a little bit of weakening we've seen in a bit. On the positive side, one of the things that was kind of hanging over the economy was the United Auto Workers strike, and that's gotten resolved. So I think one of the things I've heard more people talking about and makes sense to me is really how much can these central banks at this point, given that they've been restrictive for so long, really affect things that much going forward. And I think in the U.S., the conversation is starting to say, well, part of what is driving the strong economy has a lot more to do with fiscal stimulus because the U.S. is running up big deficits. And there doesn't seem to be much appetite politically, given we're in an election year now, for the Democrats to pull back on spending. Republicans, of course, will make a lot of noise about it. But in fact, if you actually look at historically, most of the big deficit spending has been driven by Republican administrations. So that's kind of an inconvenient truth in the conversation. But the net of it is, in an election year, there'll be a lot of talk. But I think there's some concern about the inflationary impact of spending, as well as just the U.S. has to borrow a lot of money to fund these deficits, and that may make it a bit more difficult for interest rates to start coming down, even if the central banks start, looking at rate cuts.
Fans that are listeners of the show would know that you're a fan of retailers who take chances or do experiments, but you're an equal fan of retailers who shut them down when it doesn't look like they're working. So we got some news out of Amazon about their style format stores.
Right. I'm not sure this is much of a surprise. We did talk about I made a visit to the Amazon style store, the second one they opened out in California, I guess a year or so ago. I'm losing track of time. Wasn't particularly impressed by it. They've been holding at these two stores for a bit here, so it didn't seem like the strategy was working. So they have announced they're pulling the plug on Amazon Style, which was basically an apparel store. Some people refer to it as a department store. It's very much not a department store. It's quite a bit more limited in the selection. I think it says two things about Amazon. To your point, I think they are great at experimenting, and they are also great at pulling the plug, as you said, when things aren't working and moving on. So I think that's a lesson for lots of retailers, which is to experiment more, but fail fast. But I think it also speaks to just the general struggles that Amazon has with getting physical retail right. It's to me, it's too much of a tech-loving, left-brain approach to situations or opportunities that have more to it than just merely kind of the best engineered solution. So I think we see this in how they run Whole Foods. We've seen that in some of their other retail concepts.
Now let's get to the other end of the spectrum with another behemoth of retail investing. $9 billion with a B in stores. So that's laying down a testament to investing in physical retail. Talk about a little bit of the details and what your thoughts are.
Well, it's certainly the other end of the spectrum. We did an episode a while back called "The Stores Strike Back Again," and this really
again and
again. Yeah, once again, turns out physical retail not only not dead, but some players are really doubling down, tripling down, quadrupling down, however you want to think about it in Walmart's case in their investment. So yeah, $9 billion going into stores, 1,400 stores. That's, I think, roughly 30% of the chain. They're going to do this quite quickly over a 2-year period. And it's really a rollout of elements they've been experimenting with for a while. Their so-called Store of the Future. I know people have mixed reactions to the Store of the Future moniker. But they're doing a lot of things that are probably in many respects pretty similar to what Target's been doing as related to kind of this hybrid approach to retail, bringing more digital into the stores, supporting their fulfillment from store, those kinds of things, as well as just kind of updating, modernizing their look, improving lighting, things like that. So yeah, this is on the heels. I think Target's total investment is in this vicinity. They got a little bit earlier start on this. So yeah, big investment. Obviously, they're pretty confident that they really see, or it's an indication that they really see stores as kind of the hub of their brand and doing the things to kind of embrace the blur of digital and physical.
Again, I don't know which end of the spectrum we're at here with Shein, but Shein's got some money in its jeans, and they're doing some buying. So talk about misguided. Is it a misguided choice, or are we misguided in talking about it?
Well, so Misguided is a relatively small, but was kind of a hot brand for a while, more in kind of the fast fashion space. They're about, I think, $350, $400 million a year. They were acquired by the Frasers Group over in the UK not too long ago, I don't think. I actually meant to look that up before we got on mic, but I think that was a fairly recent acquisition. But Shein is buying them from Frasers, and this is part of a bunch of moves that Shein has been making pretty recently to kind of, I guess, improve their position globally, you could say. So this comes on the heels of a deal that happened a couple weeks ago to distribute a line of apparel for Forever 21. They've been adding a bunch of executives with great experience globally. They're trying a lot of stuff. I mean, as we, I think, know and have talked about a few times, Shein, Temu have just been growing like crazy and have
preparing for an IPO in Shein's case.
Allegedly, yes. So, Yeah, it's just interesting how they've gone from pretty much not existing just a few years ago to growing on their own, but also doing some interesting partnerships to improve their customer acquisition, improve some of their capabilities.
Yeah, like a consolidation around fast fashion, right? To get that valuation together and start pulling stuff together. So I was on an airplane this week. We're on airplanes quite often. Three words we never want to hear on an airplane: brace, brace, brace. So let's talk about earnings, because lots of earnings about to hit us, and we're going to learn a lot of things. So kick us off.
Yeah, the earnings of the last week or two, not to get too into the minutia here, are those retailers that have a September 30th quarter ending, and then we'll have probably a couple weeks break after this before we get a lot of the other retailers that have quarters ending in October. So, and many of those are the Walmarts, the Targets, the Best Buys, the Home Depots, those sort of retailers. But we did get news this past week from Starbucks that, with all the talk about inflation, and if you go to Starbucks and you see the prices of some of their stuff, I'm always amazed when I go in and get a basic drink and something to eat, and it seems like it's $13 or something. It's kind of crazy, but that doesn't seem to be holding them back, or maybe that's propping them up, because their comps were higher than most people expected at 8%, and they continue to open stores, mostly globally, not so much in North America, but
after closing a lot, though. I mean, it's interesting, right? Because they I know, even in Canada, I think it applies to North America. They closed like 200 stores.
There was
COVID.
Yes, I think right. There was a kind of right sizing that they did, but I think it was particularly given, we've talked about a bunch of times the shifting traffic patterns in urban areas. But yes, they continue to expand. I think I saw that the CEO had said they expect to have 50,000 stores globally in the not too distant future. So that seems pretty insane. But yeah, very strong performance from them. And then a totally different kind of brand, but Shopify, which I think last year we were talking about some of their struggles. Well, they've had a big reversal in fortunes. Their revenues were up very strongly, 25%. So that's definitely above the overall e-commerce trend, quite a bit above, for example, their other big competitor, I guess you could say, most direct competitor, Amazon. And a big turnaround in profits. They had very poor profit performance last year. Massive swing, so improving margins across the board. And then the last one I was going to mention, I guess on the positive side, then we get into a little bit more mixed kind of perspective, is e.l.f. Cosmetics. We had Lori Lamb, their chief brand officer, on just a few weeks ago, and they just turned in a blockbuster quarter, 76% sales growth, very strong earnings. And unlike most retailers' stocks, which are down this year, they're up only 70% year to date. So that's a pretty phenomenal performance. So they just keep rolling along.
Now, what about on the downside? I think Wayfair posted, and we've talked about Wayfair once or 10 times. What were their numbers looking like?
Well, this is a bit of a mixed, if we're trying to be glasses half full, which is often difficult for me, given my cynical nature, but I try to step back and be objective. We had both Wayfair and Peloton, two brands we have talked about multiple times over the last couple of years, report this past week. When you look at them from a just objective standalone perspective, pretty disappointing. Wayfair had revenues that were up only 3.7%. That is, though, their first revenue increase in 9 quarters.
But given it's up, it's going in the right direction, right?
Well, but given that they are supposed to be a growth retailer, that's below their 2021 numbers. Their active customers fell during the third quarter, and that's after having fallen even bigger number the previous quarter. So that's not awesome. But to put a positive spin on this, their loss narrowed considerably. Now, some of that comes from improved gross margin. We've talked about, I think they have been pricing too low, really, to be sustainable. So perhaps they're making some improvement in their promotional strategy and their pricing. They've also cut out quite a lot of costs. In particular, they laid off about 10% of their workforce during this past year, but also some efficiencies in marketing. So much better trajectory, but still a quite significant operating loss.
I saw some news about, what do we call them now? Bed Bath and Beyond Overstock, or Overstock Bed Bath and Beyond. Anyway, I think we know what we're talking about. What did you see the news, and what did you think of it?
Yeah, so just to refresh people's memories, Overstock bought essentially the intellectual property, customer lists, so forth from Bed Bath & Beyond, and are rebranding themselves mostly, I'll talk about the exception to that, as bedbathandbeyond.com. This is the first quarter where we get an insight into their performance, and it's really too soon, I think, to really get a clear read, but I wouldn't say it's super optimistic in that most metrics for the quarter were quite weak, sales down, profits down, etc. They did pick up a lot of net new customers in their customer base, and they're planning now to invest something like $150 million in rebranding the company, actively marketing to the Bed Bath & Beyond customers. So we'll see how that works out for them. So that's a pretty big step up for a company of their size. They're also relaunching, as I understand it, the Overstock.com site. So basically, they rebranded completely to Bed Bath & Beyond, and I think they felt that they were leaving some money on the table for the kind of historical Overstock customers. So they'll have kind of two parallel efforts, more of true Overstock kind of business on one side, and then the home-centered business, essentially, home and gift for Bed Bath & Beyond. So yeah, we'll see. It's early days for that, but they're definitely putting some money behind it. So swinging for the fences, perhaps.
Yeah. I wanted to end on a positive note. Italy opened up their second location here in Toronto, another 25,000 square feet. And then on the heels of announcing, the same day they announced a third location.
Yes, I saw that. Wow, they're really, must be a great market for them.
Yeah, they're falling in love with Toronto. In fact, in North America, that would make the most Italy's in any one city in North America. I think there's 4 in Tokyo. But I wouldn't be surprised to see a fourth Italy in Toronto, because Nordstrom, as we know, left Canada, and they left some pretty premium space, like at Yorkdale, in Vancouver, and in Ottawa. And these are prime spaces for Italy. And they got big partners here, right? They're partnered with the Loblaws Group. So they've got deep pockets, and if we sit back and think about grocertainment and all the different terms and the trends, your bifurcation, right? I mean, they are a high end, and they're like Starbucks. They're doing well. So I wouldn't be surprised to see them open a fourth location, because I think the market. Anyway, so it's good news. Congratulations to them, and I'll be heading over because I'm a big fan of Italian food, as I know you are. All right. Speaking of a big fan, I'm a big fan of Kristina's from EY. We've known each other a bunch of years, so let's have a listen to our interview and our conversation.
Well, Kristina, welcome to the podcast. Where do we find you today?
Oh, delighted to be here. I'm in Chicago, where we somehow received our first snow flurry today, so very unwelcome.
Well, I actually know a little bit about that because my older daughter lives in Chicago, and I lived in Chicago for many years, and I have to say, on days like today, I probably don't miss it so much. But anyway, we were delighted to have you. I know we've been trying to get you on the podcast for a bit, and finally the stars aligned, so here you are. But before we kind of jump into some of the hot topics for retail that we want to hear you weigh in on, can you tell us just a little bit about yourself and what you do for a living?
Of course. Actually, I celebrated my 10th year anniversary at EY this year. So EY being formerly known as Ernst & Young. And, you may think, well, that's tax and audit. I am not an auditor nor a tax person. My role at EY, the role I have is our global consumer leader. And in that role, my real task is thinking ahead for 3 sectors: retail, consumer products, and food and agribusiness. And thinking about, what do our clients need to be doing to, survive and thrive and be competitive in the future. So, it's the future back world that I think about, and then think about what, as EY, do we need to be doing to help our clients, meet all of the challenges and opportunities that are out there in the future globally.
And as you said, many people would know EY as a tax and accounting firm, but could you tell us a little bit more about the consulting advisory part of the world, and maybe in particular kind of what sets EY apart from some of your competition?
Yeah, absolutely. So we do have other services that we provide, of course. Tax is always a bread and butter. Everybody has to pay taxes, including all of our clients. So that's a good thing to always add to our services. But the work we do in consulting and strategy and advisory really spans the gamut from technology transformation, from strategy work, from diligence, M&A, thinking about adjacent categories, thinking about the future and how you'll meet it, whether that's through divestiture or new products and services. And so we have moved quite significantly into that space. The things that we've done historically in assurance, of course, we have audit clients around the world. Many of the Fortune 100 companies are our audit clients, but we are steadily moving into the space where we want to help our clients meet the future.
Now, that's a good segue into one of the things we wanted to talk with you about today, which is this thing called the Future Consumer Index. And could you just tell us a little bit about that work, and maybe in terms of some of the past work you've done around that study, what some of the key takeaways are, some of the things you've been advising your clients on?
I launched Future Consumer Index in March 2020, so that month and year may ring a bell for you in terms of what happened to all of us way back then. The world changed. I got notes that my kids' schools were closing, NBA was closed, restaurants were closed, and sort of everything shut down. And in my mind, I thought, well, consumers' habits are going to change accordingly, so we better get on this and understand. So immediately launched at that time the Future Consumer Index globally. I think we started with 18 countries. And the goal there was to really start tracking behavior, understanding what was changing, what might stick once it was all over, not knowing when all over would be. And the goal was really to understand how consumers were behaving, how they were feeling, what their sentiments were, and was that different in different parts of the world? So was it different in the Americas versus EMEA versus Asia Pac? And we saw, significant changes that you wouldn't be surprised about in terms of, online shopping and wondering about sustainability when you were stuck at home with all of your junk and your stuff, and seeing how much trash you contributed to when you're just all in one place and not at work or school or the gym or what have you. And so we learned a number of things about people's intentions and habits. And as we came out of the pandemic and COVID and being kind of locked up, we then continued to do the work because we thought, well, let's see what happens in the following couple of years. And so what we've been doing is really tracking the same people and adding countries. So we're in 28 countries now, and we see over 23,000 consumers that we talk to. And the real goal now is to understand what sticked, how have other shocks such as inflation, the food issues around the war in Ukraine, et cetera, impacted behavior today. So we've very much moved away from pandemic and COVID, but trying to continue to understand how those habits have stuck or not stuck based on other shocks in the system.
I'm curious myself, having been involved in a lot of consumer research, just basically understanding how well consumers are able to predict their future behavior, particularly maybe in a situation like the pandemic where they've never really experienced something. Do you have any comments just on how predictable consumer behavior is, in the work that you do?
Yeah, and I would say the work that we're doing with Future Consumer Index, or FCI, is very much of the moment. I'll get to what I think is where consumers are predictive and where I think there's an action and intention gap. But we're really asking them, what are they doing right now at the point when they're, being asked the question? So, around trade-offs they're making, because of, inflation, because of, the challenges to their household budgets, et cetera. So we're asking them, what trade-offs are you making? Where does private label fit in? Are you shopping in different places? Have you pulled back on online shopping because of the cost of returns and the cost of shipping? So we're getting that data that's real. I hope so. That's actually what they are doing. The place where I find, and I've seen this over the 13, we've done this work now, I guess the 13 waves of this work. Wave 13 will be launched in the middle of November. Where I see the more aspirational, or where there's sort of intentionality, but I really wonder about the action, is when you ask about sustainability. So, would you be willing to pay more for sustainable products, or are you willing to change your behavior if you knew that it was going to help with climate change or help to mitigate against climate change? Those types of questions where we're trying to understand a bit more about people's attitudes towards helping with sustainability and helping out and making trade-offs, I'm a bit more suspect, simply because I think I've seen this before, and you would have too, if you've done this kind of research. When you're asking people about the future or what would they do or what might they do, there's always a gap in terms of, and
maybe
especially
a little
now.
bit of, and maybe a little bit of virtue signaling in terms
Correct.
of
I would love to spend more on sustainable products, but inflation's biting me, in the behind. So that's really not going to happen. So, and I think, we do see some of that, because that's actually a part of our work that we've been asking quite regularly. We haven't kind of moved away from that, because we really want to understand, what people are saying. Because frankly, our clients are left holding the bag, because you have consumers saying, I would do this and I want to do this, and I expect retailers and manufacturers to do these things and do them for me and make them affordable. Right. So, but we're seeing, that's where I see that the real challenge around kind of prediction.
It's a great discussion. Now, Kristina, you and I, by the way, public service announcement, fellow Canadian. We met.
Yes. That's why I can handle the snow on October 31st, where we're recording this.
I took the under at 9 minutes as to when that would come up, so I just barely
knew it was
won.
going to come
Good
up.
for you, Steve.
You knew it was going to come up. You and I met in Vancouver, and we had the chance to talk on mic and just off mic, so to speak, even during the pandemic, and we were kind of reflecting on the study and how it was talking about the adaptations that consumers were making to unusual times. I guess we could almost say that we're in the post-COVID era, but unusual times continue.
Correct.
But if reflecting on your experience, I mean, every day you're talking to clients and they're talking to you. What do you think's fundamentally changed in a post-pandemic world? Some things were on their way there. Some things were maybe, new and then went away. But do you think what's really, do you think has changed that we need to know about that is really fundamentally different and consistently different?
Well, frankly, I'm actually especially in this latest round of, insights from FCI, but also talking to clients. I think clients especially are surprised by the pullback, I think, for certain segments of consumers in online shopping, online grocery shopping, online, soft lines shopping. And I think because it's frankly expensive. So, consumers are kind of trading off the convenience of that with having to go back into stores. And I think that the numbers that I think we're predicting and that our clients are experiencing is more than I think expected. And I think there's, the real cementing of store brands or private labels, I think is much bigger than expected in terms of staying power. So, we do see some consumer segments kind of going back to national brands, but, that habit out of COVID in terms of I'll take whatever I can get, if there's, right, there were so many things that were out of stock, people tried all sorts of things.
Lots of brand switching, right? Lots of brand switching.
And that inflation has helped cement that for many segments of consumers where they're just fine with, private labeled goods, store brands. But what we have seen in our latest round of research is that consumers notice that private label is also getting more expensive. So, they're not able to, maybe an Aldi or, something like that is holding the line, but there are other, retailers who are not able to keep the pricing where it was.
Right. Now you talk about, I think you said the 13th rev of the report, which is coming out later in November. Can you give us a sneak peek or a little, talk about the key themes and insights that will be reflected in the report? And when the report comes out, we'll make sure and amplify. But any sneak peek out from the covers of the embargo?
Sure. And it won't be things that are surprising you if you're, paying any attention at all to what consumers are doing and how they're thinking about their, budgets and what they're up to. I mean, inflation has really made consumers all over the world think about their spending and their budgets. And so, if you think about holiday shopping, everyone will get excited about that topic coming up. A lot of signaling in almost every market where that's relevant that consumers are doing that shopping already. So they're looking for, sales events and, kind of very clear about the things that they want to buy. And so that's already happening. So, and you would know that you're in this business. I mean, what used to be really seasonal events and so on, consumers all over the place are looking out for things that fit their budget and buy them when they can buy them and when they see them on sale. So we've clearly seen that. Even the research was done, a month ago, or you know what I mean? Like they were already doing this back then.
It feels like a big Black Friday, Cyber Monday, and then a deep trough afterwards, I think is the way it feels,
yes. Yep. And I think, it's more challenging for retailers to, of course, plan for this because it used to be quite easy to plan for your big events, your seasonal events.
Yeah.
And even, I remember the previous wave of FCI, there was people said, I'm going to do much less back to school shopping. So all these things are changing and people are just on the hunt kind of all the time. And I think the other thing we've noticed in terms of the research, and this is also something that popped in almost every country in the research, is just, I don't have as much money to be out and about anymore. As much as we said experience over stuff was a trend probably last year.
Sure.
I think even now, many segments of consumers are feeling the pinch on splurging and looking more at what is truly essential for them and pulling back to more home entertaining, less ready meals, less ordering of takeout, and really, pulling back into more traditional, cooking at home or being at home. And so we'll see how that plays out over the holiday season for, restaurants and entertainment outside. And I guess we can take off out of that probably, the Taylor Swift factor. maybe that's why nobody has any money to do anything else. But real pullback though on just looking at my budget, what do I actually need? And people will say, and so Steve, this gets back to the conversation around the virtue signaling, the sustainability. People will say, oh, I'm looking more at not creating as much waste, and I'm looking more at sort of thinking about how I can help the environment, and but I think at the end of the day, this is about your household budget. And, I think a majority, over 70% of consumers in our research said their personal finances and their household finances are a concern.
So I'm curious, I'd love to get your perspective on kind of what's going on more globally, but specific to what we're just talking about, are you able to tell from the research or just from speaking to clients what to make of what seems to be a little bit of a dichotomy? Because on the one hand, we have all these household budget issues, higher interest rates, lots of things that suggest consumers are not going to spend as much, going forward. Yet some of the most recent results, particularly in the U.S., have been pretty strong. Are you able to kind of sort that out? Is that like the revenge spending phenomenon, or just things associated with going to see Taylor Swift or Beyonce, or what's going on there?
I don't have, I'd have to speculate, Steve, but I do think it's a good question, and it's an interesting economic phenomenon this year. And I think, when I look at just, if I infer from some of the numbers I see and what I'm seeing consumers say, it really is about saving up for those big moments and then knowing that I've got to pare back and I've got to get back to essentials for all the rest. And right, it's not just Taylor Swift effect, but all sorts of sporting events or big entertainment events, and that's the the one or two things you do in the year, and then you've kind of pared back to basics on what else is in your budget, or pared back your holiday somewhat, or what have you. I mean, it's very interesting to me just how much people are, to your point, willing to spend on entertainment. And then kind of really cut back on everything else, and that might mean doing the shopping at Aldi or doing the shopping somewhere else, and just getting what you need.
Yeah, being very strategic, I guess, about how you think about spending. So I know, well, first of all, you have a global role at EY. I believe you spent some time a number of years ago living and working in Turkey. I think I have that.
I did, yes.
Right. So you've got
which just celebrated its 100th birthday.
Right. Yeah. So you've got this global perspective from the course of your career. Are there any important differences you see between what's going on in North America versus Europe versus Asia, Africa, and Middle East, and so forth? Or some of these seems pretty consistent?
What we were just talking about reminds me of Europe. If I was surprised, I was a much younger person the first time I went to Europe, and then ended up living there for, between Turkey and London and Dubai, which isn't Europe, but for 18 years. And so I feel like that conversation we were just having about, do I splurge on a concert and then I'm really miserly kind of on my meals at home and, the things because that is kind of the European way in one sense. That's where luxury came from, right? So I was surprised when I first went to Europe, much smaller homes, apartments, flats, just not kind of willy-nilly spending, but, fantastic clothes or a well-decorated apartment or what have you. And I feel like, that is, is a real way of life and cemented, in Europe, kind of forever. And this year actually has reminded me quite some of that, where, people are living in a, 800 or 900 square foot place, but they have gorgeous clothes and you know what I mean? So, and go to, interesting, music events or whatever it is. And so I just wonder if it's just in North America where, maybe we're catching on, we're being forced to catch on in some ways because of inflation and some of these other trends, but really rethinking, what's important? How much do I need to actually have? How much stuff do I want? How full does my refrigerator need to be? And I think that, that sort of way of living, when I lived in Istanbul, very similar because, it's a lot of people in small spaces. And so you think about, well, how do I treat myself or what's something exciting I can do out of the home? Frankly, when I moved there was very little in ways of prepared foods. Everything was cooked at home. You shopped at markets. So I don't know, maybe, I feel like we're going back in time sometimes when I look around North America and seeing some of these things that, we kind of gave up. And as we moved into packaged foods and, everything else, and we're really rethinking some of that, or at least some people are rethinking some of that.
I want to circle back just really briefly. We talked about how there's been this leveling off or reversion to the mean, or however we want to describe it, in transactional e-commerce. But I'm curious if we think more broadly about the impact of digital, because I think sometimes in retail, at least, we get hung up on how something is ordered as opposed to how the demand is generated or fulfilled or other things that are important to retailer performance. I'm curious what you're seeing more broadly with digital technology, whether that's in media or the metaverse or any number of things that are going on in retail that you think are really important that perhaps retailers aren't paying enough attention to.
Well, first of all, I will not go near the topic of the metaverse. So
that was just a test. That was
just last year's news, Steve. So I better not say that because I do know we're working with some very interesting clients in sure. some metaverse things. But yes, we're not. I'm thinking less about these days.
That's the third rail of retail or something.
Yes, exactly. Thanks. So one thing that we've actually been trying to, really exploring and working with, and I see it from both sides because I work with a lot of, consumer products companies. Global manufacturers. When I make this point, retailers are swarming in data. You know that, and so one of the things we've been working to help with is just what do you do with it all? How do you first of all make it safe? Secure. And that's where our cyber teams come in. But then, how do you use it? What do you do with it? How do you make it your strategic advantage? It's not just data, but it's, turned into strategic insights. And I think we're seeing some retailers figuring that out and investing there. That takes a lot of capital to put in place the means and hire the right people to be able to turn that, all of that data into a meaningful data lake and then be able to use it. And so, and I see, there are some retailers that are getting much smarter at that in terms of how to build loyalty with their consumers, whether that's as basic as, all the perks and benefits you get from a loyalty card to the point at which you can't shop at that store if you don't have it. So almost weaponizing the loyalty the loyalty scheme. But that's because they've got the data and they're figuring out how to use it properly. And every time, you make a purchase through that card, you get a benefit, and they make sure that they understand what benefit you want and what you're willing to trade off to share your data and make it worthwhile. And I think we're seeing, a lot more brands, especially in Europe, to be honest, getting much smarter and more strategically organized around both, as I said, weaponizing their loyalty programs and their data, and then figuring out how to monetize it with their, in a B2B world with the manufacturers, which the manufacturers are clamoring for, by the way. I mean, a lot of my CP clients are trying to figure out, how do they integrate into the retailer's data to get that line of sight out to the consumer. And so there's a lot of work to be done there. And some companies are investing in it. I mean, it's a big challenge, isn't it? Because, now that we see consumers heading back to the stores, I think that's a trend I've noticed this year. And we see, retailers really investing in the store environment. And I know that's a big topic of yours because I see some of your writing on sort of some of the misery that we see in the store environment.
Mostly presented in a very sarcastic way, but
correct. But
turns out
I think it was
retail isn't dead. Who knew?
Yeah, retail's not dead. And so look, I think there was a story in the news this morning. Walmart's investing, a squazillion dollars in refurbishing their stores and adding the technology. This is the thing, adding the technology we all expect, because 24/7 we have a computer in our hand. So I don't want to be in a store that doesn't have that. And neither do my kids, right? So you better start investing in that store environment if you feel that that's relevant, and it better be like that computer that's in my hand. Because the next generation behind me and my 17-year-old and 20-year-old, that's what they expect.
It's a really interesting point that that stores and what consumers expect of them is very, very different than when we were growing up. And we shouldn't say, okay, it's all going back to retail stores, but the store looks and feels and needs to look and feel very different. So that's a good segue into one of our last questions, which was a short list of advice. I mean, you've got comprehensive experience around the world. How do you distill that down as we turn our minds to 2024? What are the couple of things that you would share with the listeners in terms of advice, whether they're brands or whether they're packaged goods brands or whether they're retailers? What advice do you have for how to get ready to win in 2024?
I mean, one of the things for sure, Steve and I just had a quick conversation around, you've got all this data. What are you doing with it? So, you've got to use that strategically. So, if you're going to invest in the stores, why? Who's it for? Who asked for it? And make that argument. And I think, that's going to be critically important. There's millions and millions and millions of data points generated every day. How are you going to handle that? And then what do you do with it for your strategy with only so much CapEx available? And I think, really picking off, depending on what kind of retailer you are, right, picking off the consumer segment that you can best serve. So, I guess I've said this a few times, and maybe it's because I'm just fascinated by their growth in the U.S., but Aldi is the fastest growing retailer in the United States right now off of a small base of stores, so no surprise. But they know who their customer is. So, and what they need, the size of the store they need, and they don't do anything else besides that. And frankly, I don't know how they grow that business, but they stay in their lane and they know their customer. And I think, we started off this discussion with, some jokes about, needing to know your customer. Well, that's just obvious, but I don't know that it is that obvious. So use the data, know your customer, I think is key. And then I think partnerships. So we're seeing, I don't know if the mall itself is dead, but we're getting malls inside of stores, right? So you see all these partnerships. So which ones are relevant? If you go to Target, there's an Ulta in there, there's a CVS in there, there's a Starbucks. That's becoming my mall. And so what are the relevant ecosystems and partnerships that you need to be part of? And then the other thing I would say, I read something interesting the other day about strip malls. And I think, we probably all have some jokes about strip malls from somehow in our past, or I don't know what, but they're becoming so relevant because of, buy online, pick up outside or at store, or the things you order and just want delivered to your house.
Or work from home.
Going into a mall just feels totally unnecessary when you can just kind of park outside. So I think some of these, the real estate strategy for whatever it is you're trying to do, whoever you're trying to serve, I think is also becoming, incredibly important, because I agree with Steve that physical retail is not dead. In fact, it's on the rebound. So it's what's your real estate strategy and why is it that way? And then get rid of the real estate that does not work. You're going to have to figure out how to either repurpose it, get rid of it, get out of the lease, sell, whatever you need to do.
Well, you've given us a lot to think about and a lot to look forward to with the next rev of the report. Now, how do folks, if they want to get in touch with you, are you a LinkedIn person, or they want to learn more about the work and maybe find the latest Future Consumer Index? They're all great reading, by the way. They're not, some of the questions are whether it's 6 months ago or in 2 weeks. They're great. So how do folks get in touch and learn more?
I am absolutely on LinkedIn, so anybody can find me there, certainly. You can also find me on the ey.com website and reach me through there. The ey.com website will also have the content in a few weeks from the Future Consumer Index 13, and it'll be fun. There'll be some interesting charts and different things people can play around with when you want to look at comparing countries and comparing the country to the global data, et cetera. So, those are quite fun to have a look at too. So, it's been a real joy and a journey for me to be able to drive this inside of EY because, when I joined EY, it was never clear how I was going to fit, but I've managed to figure it out.
Yeah, and bring a lot to it. I think that was part of our discussion in Vancouver when you were just launching it, and then came COVID, and now here we are, and here you were. So on behalf of Steve and I, thanks so much for joining us on the podcast. Really appreciate you taking the time and sharing your insights, and we'll put lots of links in the show notes. So listen, take care.
I have one request of both of you now.
Fire away.
Ooh.
You have. It's not hard, Steve. It's not a question that I didn't tell you about. It's my birthday today.
Hey, happy birthday.
Happy birthday.
Yeah.
Well, we wish you many, many more, and come back on the podcast and tell us about all your birthdays.
Would love to be back. Thank you very much, both of you.
If you like what you heard, please follow us on Apple, Spotify, or your favorite podcast platform so you can catch up with all our great episodes, including renowned author, entrepreneur, and leadership teacher Seth Godin, talking about his incredibly timely and urgent book, The Song of Significance, a new manifesto for teams. And be sure and drop us that 5-star review where you listen to your podcast. It really helps us spread the word.
And I'm Steve Dennis, strategy and innovation consultant, keynote speaker, and author of the best-selling book, Remarkable Retail, How to Win and Keep Customers in the Age of Disruption. You can learn more about me at stephenpdennis.com, and be sure to follow me on LinkedIn, Twitter, Threads, and Instagram.
And I'm Michael LeBlanc, consumer retail growth consultant, keynote speaker, producer, and host of a series of retail trade podcasts, including this one. You can learn more about me on LinkedIn. Safe travels, everybody.